following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Dave in Clearwater. Hey, Dave, Happy New Year. What's happening, man?
Happy New Year to you, my brother. How are you, sir?
I'm doing great, man. How you been?
I am doing well, man. I'm doing well. Can I throw a quote out at you?
Sure.
In the market, somebody knows something. Someone always knows something. That statement was made by a great trader by the name of Tom O'Brien about 6-7 years ago.
Oh, yeah?
And it kind of hit me like a brick. You're right. Somebody always knows something.
Hey, Carlos, what's going on, brother?
I'm calling you back, Tom. This morning I had the pleasure to talk to you and your son, and I don't want to miss the opportunity to talk to you again.
Well, I think you made some money on this bond.
Oh, yes, Tom. Your newsletter helped me.
That's a beautiful thing. We appreciate you growling and prowling with us out here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's a TGIF, folks. Let's make it a great one. Don't take anything personally. Your truth is personal to you. Your own opinions and point of view reflect your own agreements and are personal to you. It's no one's truth but yours. Market-wise, let's take a look at it out here. We have the Dow Industrials down 2, NASDAQ off 1, S&P's down 2, gold contract up $3.20, traded at $1,236 an ounce. Silver up 24 cents, $17.99 an ounce. Platinum up $8, $9.96 an ounce. You got copper up a penny and a half at $2.69 a pound. Light sweet crude up 63 cents, trading at $52.23 a barrel. Notes, 10-year note up 4 ticks, 123.20. 30-year bond up 7 ticks, 149.10. King dollar down 686, trading at 101.515. The euro's at 106, and the yen's trading at 114. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? You get the SPY trading flat, literally flat. You're at 238.26. The bottom of that gap, or the top of the gap, is 230.695. You're pulling back with lighter volume. That's still saying that your S&P's in an ABC structure on the way up. Dow Industrials, same type of setup inside the Dow Industrials. Dow Industrials, right now you get a flat market. Bottom line, you're pulling back with light volume. We take a look at the volume characteristics out here. You're at 500 million on the NYSE, so I suspect we're going to come in about 750 today. Inside the NASDAQ composite, we are at 1.3 billion, so you'll come in at about 1.6 billion. So in both cases, that's going to be light volume. We go over to the NASDAQ composite. We take a look at the composite. Now, the composite is at 5861, 5866. That anything under 5866 keeps you in the lower range. So it's going to be interesting coming into the close here, if in fact that's going to be there. It's light volume, but you get in that little lower range, that can dip right back down to the 5800 pretty quickly. The NDX 100, the 3 Qs. What do we have at the 3 Qs? Same type of setup in the 3 Qs. I believe they're over the range, though. Right now they're over the range by 17 pennies. 130.70 would be getting them in the lower range. Small caps. We take a look at the IWM first. What you have with the small caps are in the range. The small caps just never really made it out of their consolidation. So 138.82. You stay under that number, and we're well under that number right now in the small caps, basically saying that the small caps, number one, just can't handle higher price. That wasn't a clean break anyway on the small caps. Bottom line is that they got up over the highs, but the other indices had a clean break. So small caps a game that small caps can run down to 133.17. Right now we're at 138.27. Gold contract. What do we have with gold? You get a rejection of lower price. You have lighter volume. You have all of the above, folks. Bottom line, it's going to be pretty amazing watching this thing shake out. We hit 1223 today in the gold market. And a Friday, they can absolutely smoke gold. From the highs to the lows, not a big deal. We went from 1264 to 1223, and right now you're at 1235. You have a rejection. You didn't make it to the lower swing point, which was the 1217. And that is after Yellen speaking. And, you know, it was kind of a major speech as to what's going to happen in interest rates in the next year. What I heard out there is that, they're going to go up. They're going to go up more than likely 3 times. But bottom line, it's going to be slow, and it's not going to be a fast curve. It's going to be faster than it has been the last 2 years, no doubt about that. Bottom line, though, they're not looking to accelerate one after the other. So I think at this particular point, it seems that the market has actually already baked in 3. So we'll see how that shakes out. Silver also turned around. Silver hit a low out here today of $17.66. Rejected it. You're at $18 right now. Silver still wants to run up to this $19 area, and it's the notes and the bonds that continued to give the best information and the most consistent information. So the 10-year note went down to 123.09. 123.06 is the swing point. It's amazing that it couldn't break the swing. Has lighter volume. We've done 1.2 million contracts. And it's rejected lower price. That's on the daily. That's on the weekly. That's saying that the 10-year note again is going to make a run for 125.04. That is going to be just pretty wild watching that thing shake out, because the probability right now that the Fed does go up in March is 96%. Okay, so that's saying that, hey, guess what? They're going up. That being said, they're saying they're going up. Well, you know, folks, still supply versus demand. They're in that bond market, and they're buying those bonds. And they're buying those bonds because they want their money back. The 30-year bond, 148.22. It hit, rejected it. The swing low was 148.09. Never made the swing low. Wants higher price. King dollar. What do you have with King dollar? King dollar failed on volume. Failed on price, failed on volume, on the daily, on the weekly. King dollar just sold down and sold down fast. 58,000 contracts right now. You're down 679 ticks, and you have 2 separate deals happening here. The larger deal is that you are under the 101,750 mark. That's where the failure is taking place. That was your swing point. That was established out here on the 15th of February. We had got over it yesterday. And watch this. You get over it with 30,000 contracts. What do they sell it down on today? You get 58,000 contracts. That's saying your next leg down, you're going to get somewhere into the 100.640. Then you're dealing with the largest swing low out here of 99.19. So the bottom line is that when you take a look at this market out here, what I expect you're going to see, well, XAU, HUI, let's go to the XAU, HUI. XAU also up $1.34. Got as low today as 80.96. It's trading at 82.29. Both the XAU and the HUI, they were going into the 29th and the 30th of December. That was the high volume break topside. They rejected it, lighter volume. Now you're going to get yourself a decent bounce, so we'll see whether that bounce comes with strength. And what are we going to be looking for? We're going to be looking for wide price spread. We're going to be looking for accelerated volume as we move to higher price. You stay right there, folks. We come right back.
TFNN has just launched a special event in Tampa with Tom O'Brien taking place March 18th, sponsored by Nadex. Tom O'Brien will be presenting 2 workshops for a combined 2.5 hours of education, bisecting and dissecting his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. March 18th kicks off with a continental breakfast as we get everyone checked in, and that is followed by 2 75-minute workshops with Tom O'Brien. The first workshop from 8:45 until 10 a.m. will cover quality volume, cause and effect, and ABC structures, and the second workshop from 10:15 until 11:30 a.m. will cover swing points, testing, and the Tiger Gartley. Tom will then wrap things up with a question and answer session, which will be followed by a Tiger Luncheon Social on the rooftop of the Westin Hotel. The best part is that it's all free, but you must register to attend. Visit the front page of TFNN.com for all the details and to sign up today, and we hope to see you in Tampa on March 18th. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. The Dow right now is up 1. You get the NASDAQ up 2. S&Ps are down 2. And let's go over and take a look at the airlines, folks. Okay, so airlines today get a pop. They get a pop at 11 o'clock in the morning. And what that's all about, okay, it's all about, you got to love lobbyists, folks, okay? Lobbyists, bottom line, and, you know, you've heard this administration say how many regulations they're going to get rid of. Well, they got a great start going, because the bottom line is that first they want to get rid of the fiduciary rule for broker-dealers. Specifically what that means is that they can have inherent conflicts of interest, basically, and sell you funds that they can make more money on. And guess what they did today? Okay, so today, this one's a really... This one is so blatant, it's insane. So bottom line is that there's a rule out there that has been going through that the airlines would have to require to tell us when we're booking a ticket exactly how much we're going to be paying for the bags and all of the above when we're booking the ticket. Not, you know, because what happens is that you book the ticket, then all of a sudden it says, oh, guess what? If you want to bring a bag on, it's this much money, it's that much money. Well, bottom line is that the administration out here just canned the whole deal. They canned it at 11:30 this morning. And what did it do? Of course, it made the airlines go higher. So just so you know what you have corporations running consumers, and you better start being smart as a consumer, because this is just the start of you getting fleeced a lot more by companies. And this one here is just so blatant, it's insane, because this is not a partisan issue, man. This is flat out an issue that you're allowing non-transparency when we're all booking flights. That's the bottom line. It's that cut and dried. And guess what? It's that cut and dried that the airlines love it, because you get these airlines, they went topside pretty quickly, because the amount of bread that is sustained on extras inside the airline business now is absolutely huge. So, you know, I suspect the next thing that is going to come down the line is that they'll end up putting a weight restriction on everything, including us. That's the bottom line. Let's go take a look at some of the higher volume stocks out here in this low volume market out here today. You get Snap. Oh, yeah. So it's the Snapchat. Snapchat goes public yesterday. It's up $2.75 today, $27.10. You got NVIDIA down 56 cents. You got Kruger off $1. Microsoft is up 20 cents. You take a look at some of the Dow stocks out here. You get ExxonMobil down 94 cents. Well, let's go over to the XLE and see what's happening in the XLE. So XLE out here is down 20 cents. You're trading at $71.91. That's pulling back on light volume. This has had a tough time period. It's the XLE is down from $78. We go take a look at Exxon, which is the largest weighting structure. That looks like it's going to. We'll see. 81.71. Looks like it wants to test 81.71. We go take a look at Chevron. What we have with Chevron, just a sideways move out there. Inside the financials. So the financials are going to get a big jump. And, you know, they don't have it today. They're backing down with light volume. But let's go over to J.P. Morgan, because what you do have is it's pretty amazing how quick the Federal Reserve could flip around when rates are going to go up. Because the bottom line is that, you know, when we look back last Friday, yeah, this is pretty amazing, actually. When we look back last Friday, I'm going to bring this up here. Yeah, this she is right now. Okay. So when we look back last Friday, there was a 34% chance that rates would go up. And then at 10 minutes of 4, that went up to 52%. And then on Monday, that thing took off to, I believe, 60%. Bottom line right now, it's at 94%. And there was absolutely a flood of Fed governors coming out saying they wanted to go up on rates. Or they thought it was, you know, the time that they could go up on rates. And it was one after the other after the other. So I suspect that's exactly what we're going to get out here. We go take a look at the, let's go into the Gold Bugs Index, the HUI. HUI out here. So the Gold Bugs Index out here, we're up 491 right now. You came into the strength from the 29th of December as well as the 30th. That low there is 179. The high of the low is 189. That's nice. That's what we did. So what you're going to have here is this. We're going to have a rejection of lower price on the dailies, which we know. On the weeklies, we're also going to have it, and we're going to have it right where the strength is. So what it has done is that it comes into the top of the strength, which is going to be well, this would be nice if we could close above 194. 194.75 would be great. And right now, we're at 193.12 because it dug into that bar. You get above that bar, and that's going to be a good scene. Oh, this is cool, too. Actually, there's two different things here. You actually just have to close above 192.20. So 192.20 is the low of the week of January 13th. And it looks like it's going to do that. That high, yeah, that low. That's what it looks like. If we go into the SLV, let's go into the silver market here for a second. Silver got toasted yesterday. You talk about toasted, man. That thing come down 70 cents, which is just amazing. You know, that being said, you know, silver had gone one way from $14.85 all the way up to $17.53. And now what you're going to have is that you're actually going to close over the lows of last week. So the bottom line is that, you know, yeah, I can make the case that you're actually pushing into a high with volume. That's what's going on. You know, we did 45 million shares. You know, you close above the $16.90, and that's what it looks like we're going to do. You're actually pushing into the bar, which we have been for 6 weeks now. The downdraft bar from the 11th of November was vicious. That's when silver went from $17.87 down to $16.31. You know, so that's how that baby's shaking out. If you stay with the we go back to the S&P for a second. What you're going to see, and this is where it's going to get intriguing here. So the cash S&P, folks, well, all the indices are in confirmed ABC structures on the way up. We'll see how this baby shakes out. It's not that they have to get that much higher, but when they did break Wednesday, they broke with volume. That's a confirmed ABC structure on the way up. They are going to have the juice on the weekly also. We can put the weekly up right now, actually. Yeah, they get the juice on the weekly, too. So the key is to let that baby play out. Where the divergence still comes in, which is pretty cool, is the aspect that the Fed, is laid out, man. They're going up. They're going to go up 3 times, and you still have bonds that are positive. You have the dollar that is going downtown. And so that's saying that inflation is going to be over the cost of interest rates. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new Market Safe Core Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials right now are up 10. You get the Nasdaq up 5. S&Ps are flat. And I'm in. Dave White's putting something in the den right now about Uber. This is a trip, folks. So listen to this. And this is where this whole social network that, you're on the networks, you got to remember something. They can always track you, grab you, all of the above. Uber, it's called Grayball. It's a Grayball tool. Now listen to this. Uber has for years engaged in a worldwide program to deceive authorities in markets where its low-cost ride-hailing service was being resisted by law enforcement or, in some cases, has been outright banned. The program, involving a tool called Grayball, uses data collected from the user app and other techniques to identify and circumvent officials. Uber used these methods to evade authorities in cities as Boston, Paris, Las Vegas, and countries like Australia, China, Italy, and South Korea. Grayball was part of a broader program called VTOS, a shot for violation of terms of service, which Uber created to root out people it thought was using or targeting its service improperly. The VTOS program, including the Grayball tool, began as early as 2014 and remains in use, predominantly outside the United States. So what it does, here's one here. Uber's use of Grayball was recorded on a video in late 2014 in England. A code enforcement inspector, when Eric England, a code enforcement inspector in Portland, Oregon, tried to hail an Uber car downtown as part of a sting operation against the company. At the time, Uber had just started its rideshare hailing service in Portland without seeking permission from the city, which later declared the service illegal. To build a case against the company, officers like Mr. England posed as riders, opening an Uber app to hail the car and watching as the miniature vehicles on the screen made their way toward the potential fares. But unknown to Mr. England and other authorities, some of the digital cars they saw in the app did not represent actual vehicles. And the Uber drivers were able to hail quickly canceled. This is because Uber had tagged Mr. England and his colleagues, essentially grayballing them as city officials based on data collected from the app in other ways. The bottom line is that they have everything on us, folks, okay? That's whether it's Twitter, whether it's, Facebook, whatever you're on, you got to know that they have everything on you. Steel stocks, okay? So let's take a look at U.S. Steel. I've been looking at, U.S. Steel has had quite a run. That run being from $17.05 on November 2nd, runs all the way up to the highs here of $39. And what that's all about is, of course, the aspect that we're going to be using U.S. Steel or steel in the United States and all these pipelines. Well, guess what, folks? This just happened. This just come across. And I believe what I heard when I was hearing that speech, that when you're talking about the Keystone Pipeline, we're going to be using U.S. Steel. Well, literally, it's literally 9 minutes ago, that has changed. And here you go. So the Keystone Pipeline won't be required to use American-made steel in construction. Approval from the Trump administration, the White House said literally 9 minutes ago. So check it out. The president's executive order mandating the use of U.S. steel is specific in new pipelines or those that are being repaired. White House spokesman Sarah Sanders told reporters aboard U.S. Air right now as we're talking. So bottom line, there you go, folks, okay? U.S. Steel, you talk about running, they ran it all the way up, folks. And you know what? Someone already knew this because the first sell down on this, if you take a look at this, the first sell down, this is just amazing. This is really amazing to me that it just kept getting said over and over and over again. And they got to run the market with it in a big way. But then what happened is that on the 23rd, U.S. Steel took a beating on the 23rd, $41 to $36, right? Then it comes back up with light volume. So watch. It goes down with 32 million. It goes back up with 21 million. Now it's back in the lower range. And this literally just came out 9 minutes ago. I'm surprised that it's not getting hit more at this point. But guess what? It's Friday afternoon. As our man Dave White would say, the large companies love to put stuff out like that on Friday afternoons, large corporations. In this case, it was the administration that put it out. Because guess what? People aren't paying attention. That's what it comes down to. But bottom line, Keystone Pipeline, no U.S. Steel. No United States Steel made, period. If you want to read the story, you'll see how this is shaken out. Okay, so bottom line, just pay attention to what's going on, folks. That's the bottom line. We get another few hours here on a Friday afternoon. We'll see how many more little orders are going to be slipping out between the airlines paying attention to how many fees you're going to get. And if you're a company, I'm sure that's a bigger deal with the U.S. Steel deal. There's no two ways about that. So now we're, Chinese companies, big profits, no doubt about that. Yeah. 877-927-6648. It would be pretty hard if that story was out this morning and it's just going across in the U.S. air right now. But regardless of when the story was out, the bottom line, it's an out-and-out lie that U.S. steel was going to be used. That's the point, okay? It's that cut and dry, okay? You know, you take an aspect that you're saying on a continual basis. Guess what? The pipeline's going to be made. It's going to be U.S. steel. The order comes out, no, it's not U.S. steel. That's the reality. Separate the reality from what is being said, because it's really important. We take a look at some of the higher volume stocks in this low volume market. You get Chesapeake Energy down 4 cents. NVIDIA's off 59 cents. Apple's up 77. You got Intel. You know, Intel evidently is having some trouble. It hasn't moved that much. But what you have is this, is that when the S&P took off, went up 300 points, when the market continues to go higher, this thing is just going sideways. In fact, Wednesday, when the market was up those 300 points, there was only 2 Dow stocks that were negative. It was Walmart and it was Intel. So keep your eye on those in a big way. And if you're in those, make sure you get your stop in. Walmart right now is trading at $70.02. Walmart also, bottom line, did not perform when that market went up. And, you know, that's a whole relative strength trade, but that's really important to keep your head wrapped around it. Let's go over to Apple. Of course, Apple's laying at these highs up here. And let's see. Yeah, so, you know, this is going to be interesting because Apple took out a B point too. You know, pull this back up. Let's see where we're at. So Apple's over its highs, 134.54. My God, it's anemic volume. So it's 578 million versus 900. Oh, this is going to be interesting. So the last high in Apple on a monthly basis, Apple reached its first high in April of 2015. That was almost 1 billion shares. When it took it out on 575 million. You stay right there, folks. We'll be coming right back. Our phone number is 877-927-6648. Dow's up 9, Nasdaq's up 7, S&P's are flat. We're going to be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow is up 10 right now. Nasdaq's up 7. And if we go over and we take a look at this, let's see where this is going to be. Yeah, well, we're not going to be, we're definitely going to be laid out here at the high end of the range. You know, the high for the week in the Dow is 21,169. You're at 21,010. I mean, that's about as good as you can get. That's definitely laying out a big high number. There's no two ways about that. We go take a look at the XLK, and the XLK, of course, is the technology select. Inside the XLK, the highest weighting structure is that you got Apple, Microsoft, Facebook, Marvell, Google, Cisco, Intel, Verizon, and Visa. This here also is laying out at a high. This broke topside on Wednesday, broke with volume. Now, what's intriguing about this, if, you know, right now this is an ABC up 2, and this is an ABC up. It's a big one, folks, okay? So your A point on this is $50. Your B is, oh, no, I see. The range in the chart is smaller. Okay, that's only, so your A point is $50 approximately. Your C is 52. It's only 265, which would get you $55. So that isn't the biggest thing in the world. We've already reached 53.16. You know, coming out this week, folks, well, not this week. Let's see. Coming out on March 11th, Bitcoin. Bitcoin, let's pull this up for a second. So Bitcoin, the currency, actually got over the price of gold this week. Right now, Bitcoin is trading at $12.79. You know, we have gold trading at $12.35, and the Winklevoss twins are going to get an answer on the March 11th if, in fact, the SEC has approved their Bitcoin ETF. So if you get that, which I suspect we're going to probably get it. They've been going after this for like 4 years. And most of the time, the way that it works, folks, is it takes a long period of time. They keep asking for more documents, more documents, more documents, how are you going to do it and all of that. When they come to a decision, most of the time, you know, the 4 year, that's why it's taken so long. Now, what would happen is that immediately what I expect you'd probably see that, you know, with this inside an ETF, you're going to see even more juice. So, but that is going to be one of the most volatile ETF structures out there. Bitcoin was trading at $752 in January. So it went from $752 up to $12.79. That is a big number. We'll go back over to the XLE. Tiger got a question about the XLE. The XLE right now, you know, bottom line is that you haven't broken a swing on the way up. You know, Exxon is tired. You know, on a daily basis, what you have done is that you're pulling back with light volume, which is a good indication that it wants to go higher. You know, we broke topside on Wednesday. You had 18 million shares. It is coming back into support. We had support in the XLE from November 9th. The high of November 9th, $70.97. You had 25 million shares there. First time we came in, you came in with 16 million. Second time you came in with 13. Then you broke topside with volume. So what you want to see inside the XLE, you want to see it to hold the highs of the 71.91 area. That's kind of how that's set up. There's no reason that it can't, bounce up into this 73.14, once again. Now, if you bounce up to that 73.14, which is the high of Wednesday, and you see the volume go light, then get out of it if you own it. If you're looking to buy it, I'd just wait to see whether you get that rejection of price on the daily. Because on the weekly, it hasn't shown anything. The weekly, it's going to close under last week's high, which is the, 72.85 number. It's still coming into major support, though. I mean, the major support is $70.07. You can see that quite clearly from December 2nd. December 2nd, you had 127 million shares on the weekly. You had come into that with 60 million. Then we came into it with 54, When I go over and look at ExxonMobil, though, it's kind of dicey, and that's the largest weighting structure. ExxonMobil has to get a lot higher. That has to be inside $82.99, and that is the largest weighting structure. Exxon has basically, it looks to me like it's building cars to get down to the price point of that high volume swing low. So it's 75 to 66. So. And if we go, well, in that context, let's go over to the oil market, because oil also got back inside its lower range, folks. So oil, here we go. So oil right now is trading $53.18. This baby came down hard yesterday, had the volume behind the move. Anything under 54.02, which you're in the lower range. What has happened is that, it's basically come back and forth into this lower range many times since, January 10th. But bottom line, it looks to me like it's game to get down to 52.32. If you get into that with volume, you can get down to the very beginning of that bar. The first bar that I gave you, that was where the OPEC meeting took place. And that's when, in November, and that's when oil went topside and, very fast and furious, no doubt about that. Russell 2000, this is the weakest indice. Now, the Russell hasn't cooperated, with the rest of the indices going topside. We're still right where we were on December 9th, which is pretty amazing, actually. We're at 1393. What does get intriguing here is this. Is that, so picture, inside the Russell, folks, inside the Russell, you have a lot of commodity stocks, however. So if, in fact, these commodities start running again, well, guess what? The Russell might be the one that has to catch up in this context. And, the Russell, no doubt, can move very fast and furious, in a very fast way. It's going to be intriguing to watch today as we come into the close as to what the buy point will be inside the GDX today. Because what has happened here is that you get a good turnaround inside the GDX. And what will end up happening at the close out here, more than likely the sponsor of the GDX will have to buy a bit. Because yesterday we had a closeout yesterday at the 21.93. And it's not that it's a big amount. What the difference would be is that you get down to the 21.57, you've rejected that level, and we'll see whether the GDX can close out about 45 cents higher. That's what it looks like it's going to do at this particular point, because what you do have is that the run has been very fast, the turn's fast, and the turn's always fast in the gold market, folks, okay? When this thing turns, it turns very quickly, and what tends to happen is that you always get a huge amount of shots that have to cover, and most of the time they don't cover as quick as they should cover, and we've been coming down long enough now. There's a good amount of shots in the equities as well as in the metals, probably. You stay right there, folks. We come right back. Dow Industrials right now down 3, Nasdaq's up 6, S&P's are flat. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. And folks, as you come over to our website at TFNN, or you happen to be in Florida on the East Coast, even if you're in Denver, maybe you want to take a ride. March 18th, I'm going to be doing a live workshop. It's sponsored by Nadex. It's going to be at the Westin Tampa Bay. This thing is going to start, folks, at 7:30 in the morning, 7:30 to 8:30. We're going to have a continental breakfast. We're going to have a check-in. Then we have a 15-minute talk by Dan Cook, from Nadex. I'm going to be doing the first 75 minutes at 8:45 to 10 o'clock. On the first session, I'm going to be talking about quality volume, cause and effect, and measured moves in the marketplace. We have a quick coffee break, 15 minutes. I'm going to do another 75 minutes. I'm going to be talking about swing points, testing, and the Tiger Gottlieb buy and sells. We take questions for about 15 minutes, and then from 12:30 to 2 o'clock, then we're going to take a break for about a half hour. From 12:30 to 2:30, we're going to sponsor a rooftop lunching. It's going to be a cash bar, but it's going to be a social. That's the bottom line. It's free. Nadex is sponsoring it. We're putting on the luncheon. TFNN's putting on the luncheon. They're putting on the rest of it. Bottom line, You also get a copy of my book, The Art of Time in the Trade, your Ultimate Trading Mastery System. You'll get a signed copy. So check it out on the front page of TFNN. If you'd like to get a great education, meet a lot of tigers and tigers, it's going to be a great time. If you happen to, want to fly in, guess what? You're right in the middle of spring training, folks. Okay, you got the Phillies down here, got the Yankees down here. The Red Sox are approximately 2.5 hours away, and Fort Myers. But great time to come down. Check it out on the front page of TFNN. Yeah, and as we come into the closeout here, bottom line is that, we'll see whether, the XAU, the HUI, the GDX, the golds and silvers, bottomed out. Technically, right now, they're set up just perfectly. When I say set up perfectly, here, I'll just bring up ABX. I can bring up a couple of them on a weekly so you can see it a little bit clearer, actually. When you bring them up and you put it on a weekly, what you're going to see is that you came down to, where... And I always like it when this happens. So when you got trashed in November, ABX got trashed with 133 million shares. Now, we came down with big volume, but you came down with 123 million. And then what you end up doing is that you rejected the $18.35. Right now, we're at $18.31. And you're not that far off the high. If we go into Newmont, we take a look at Newmont. That's the second largest structure inside the GDX, and this is the weakest one. This is a little problem child. But guess what? Even this problem child was coming into 56 million shares, and we did 40 million. We go to Rheingold Resources, which is one of the strongest one now. Rheingold, no doubt, is the strongest one. But bottom line, with Rheingold never even made it to its low of its strength, which is $87. That baby there is getting ready to launch into the $106 mark. We go take a look at Franco-Nevada, which Franco-Nevada is one of the largest royalty stocks out here. Bottom line, Franco-Nevada, that baby was coming into 5.6 million as well as 7.5, and it did 4.7. So we'll get the XAU, the HUI. We won't get those till tonight. But bottom line is that it seems like they're set up pretty good. To get into higher price. The dollar has failed in spades, folks. Okay, as we're coming into the close, they're selling this dollar down. They're selling it down good. It's down 819 ticks right now. You're at 101.380. You've done 60,000 contracts, and that consistency is there in the dollar in a big way. You get a large seller. That seller is laying right out there at 101.750. And guess what? That's saying the dollar wants downtown, metals want uptown. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great weekend, safe weekend. Look forward to speaking to you right back here next Monday, 8 o'clock. Wow! Go get them, folks.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is TFNN.